All right, well, hey there, everybody. Chris Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday. What is it, the 27th of September, 2022. Glad to have you all checking in. Coming at you live from just north of Houston, Texas here. Man, what a nice day outside. Gets a little bit warm over here, though. It's a different kind of warm than it was in San Antonio area. So, but the AC in here is nice and cold, so I've got a little bit extra layers on here. Oh man, so how are y'all doing? Man, I had a great little surge for Bitcoin overnight. Actually well in line, did even better than what I was talking about. We had our Wyckoff session yesterday with tier 3, and they were all ready for this. You know, we talked about what we were looking for, and you know, Bitcoin did not disappoint. So we had all that. You can join us here at howtotradetowin.com. We'd love to have you there. Tier 3 is where it's at. It says 200 plus hours of educational video content and growing, guys. I'm telling you, it's probably like 300 hours now. We put out about 3 hours every week. We do an hour session on Mondays for Wyckoff. We do an hour session on Wednesdays for price action. And we do an hour session on Thursdays for Elliott Wave, guys. You're not going to find a more comprehensive place to learn how to trade than what we do here at Texas West Capital. So we'd love to have you there. Join us. What are you guys doing? Let's see who's here already. Nevlusian, Hangry Patrick can't even say it. What's going on, guys? Andrew Bennett's checking in here. Bamboo. Abdel, good morning, sir. Good to see you. Name Mr. Wilkes checking in. Data, always good to see you. LXT. He says Bitcoin about to drop to new lows. Possible. We're gonna look at what I think are probably the 3 most likely scenarios right now. And then we'll kind of see what's going on from there, right? So I guess we'll go ahead and jump on and do that. What do you guys think? Should we? Andrew Bennett says, yes, tier 3 is great. I appreciate that, man. Yeah, I love you guys. I mean, I love what I do there, especially when we get to do those hourly sessions, 3 times a week there. For me, it's just so much fun to get in there and show you guys, kind of step by step and look at current charts and say, well, this is what we're looking at, and this is how I would approach it. And, this is where I'm going to, this is where I would look to enter. This is where I'd put my stop loss, and this is where I'd look to exit. And this is why, and you kind of get all that stuff with what's going in right then. And depending on whatever way you want to look to, learn to trade, whether it's, Wyckoff, Elliott Wave, or price action. So a lot of great stuff in there. Who's that? Is that, oh my gosh, let me see. I can't even read the red there. Poison, what's going on, man? Good to see you there. I was thinking that's who it was. Shu, what's up? It says, traveling through Texas for the first time. You like it? Well, you're not done yet, right? It'll take you a day plus to travel from one end to the other. It's definitely got its different areas, Here over in the southeastern area, eastern area of it, we've got forest and whatnot. If you go back to where I just was in Bernie, you've got the hill country out there, which is beautiful itself, just different kind of beautiful. Keep on going west, you head out to El Paso, you got almost desert kind of area heading out there. You head up north, you got the plains. And guys, I'll tell you what, you may think it's hot in Texas all the time, but man, oh man, if you're living up at Lubbock, Amarillo, something like that, up in the plains area, holy crud, man, it can get cold. You get blizzards up there and whatnot. I had a blizzard when I was in law school. Back in, I think it was probably 2016 or so, we had a blizzard that came through that just like locked everything down for like 3 days. We couldn't do anything. I was stuck. It was crazy. The city has since bought a few new plows since then to kind of plow things out. But man, it was crazy. So, and then of course you've got what we call northern Texas, which is that Dallas DFW area. And that, of course, is just its own thing as well. So lots of great areas here in Texas. Merrick, good to see you. Excuse me. LXT, I appreciate it, man, saying tier 3 is where it's at as well. JW Smith, what's up, man? Angry Patrick agrees on the tier 3. Man, you guys are great. I appreciate it. Steven, what's going on, man? Hopefully you're doing well. Andrew says, is QT going to kick off Wave C in the markets? Wave C? Man, I think if it kicks off anything, it might be Wave 3, right? So what Andrew's talking about is, we have QT, right, which is quantitative tightening, began back in June, right? And now they're looking to ramp it up. Now, again, the one thing I want to say about this, guys, is remember the Fed is always behind, right? They're always playing catch up. They're always reacting, right? So usually when they step things up significantly, it usually happens near the end, right? So you guys, when we talk about trading, we always talk about how retail tends to buy the top, right? They get all excited at the top. They can't hold it anymore, and they finally buy, right? And then in the bottoms, they sell the bottoms, right? They hold and they hold and they hold through all the misery and finally like, oh, I can't stand it anymore. And they sell, and then price turns and goes up, right? Think of the Fed as the same way. So usually they will go gung-ho, most everything there toward, when everything's at its worst, right? Kind of like making it even worse, right? And then they turn around and go, oh gosh, now we got to play catch up again. Think about what the Fed's done over the last few years, guys, right? So coming into the pandemic, remember the Fed was talking about, let's go back a little bit further. Remember the Fed for the last, prior to the pandemic, for the 10 years prior to that, since the 2008 financial crisis, right? The great financial crisis, the Fed was looking for that 2% inflation target and couldn't get it, right? Matter of fact, we had deflation hit around 2015 or 16, and then I believe again right around 2019, right? So the Fed's all upset coming in a decade of not being able to reach that 2% inflation target, right? And so then the pandemic comes in and things start pushing higher. And, it's all transitory, right? And, oh, it's fine. We're going to let it rally really high. And in that way, it'll get above and beyond, and then we can kind of let it back down, right? And then what happens? It does that, right? And all of a sudden the Fed's like, whoa, this is great. This is it's a lot worse than what we thought, right? And then the Fed jumps in and starts acting much more aggressively, right? So the Fed is always that step behind. We've had, three 75 basis point rate hikes in a row, right? And so we'll see how this all goes. I know they were talking about selling MBSs, those mortgage-backed securities. The last time, they were talking about that with the whole QT thing, right? The last time I heard, they're not so keen on doing that at the point maybe right now. So we'll see. If you're selling those mortgage-backed securities into the market, and you've already got mortgage rates really high, right? And all these things going on. I mean, it's kind of like when you've got, these prices, what they're calling inflation, right? Rising prices so high, and then you're going and continuing to tighten, right? Making it more and more difficult, making, interest rates rally higher, right? The interest rates are going higher there, making things more and more expensive, right? Same idea with the MBSs there, if they were to sell that. So we'll see how that goes. But right now they are talking about ramping up that QT. So we'll see how long it lasts. Again, guys, I want to remind you, beginning of the year, I said we'd probably have what we've had, which is we were looking at potentially 75, maybe 100 basis point rate hikes by summer. And then I talked about how I figured maybe by the end of summer, end of Q3, beginning of Q4, which is pretty much this month, right? That we'd see like the top in those big rises, those big, 75 or 100 basis point rate hikes, right? And not that they would start, dropping the interest rate after this month, but basically that they would come in lower, right? So maybe like 50 basis point next month, and maybe a quarter of a basis point the next month after that, or something like that, right? Where they're kind of slowing down, and then you get that 2023 Fed pivot, right? But here's the thing. So with the Fed and what they're doing, they're basically exporting inflation, right? When you're raising up all these interest rates, whatever, you're sending inflation overseas. Everybody else is sucking wind, right? We had the Great British Pound hit those lows against the dollar here just the other day, right? We've got the euro still popping there. What is it? 0.96 maybe, 96 cents. We've got the Bank of Japan intervening. I think it was to the tune of $22 billion to try and prop up the yen against the dollar, because the dollar, the yen's at like a 50, 60 year low against the dollar. So you've got all these countries coming in, and now we've got China saying, whoa, we probably need to step up and do something here because we're at significant lows against the dollar as well, right? So what you're seeing is the Fed exports all this out, right? So the Fed's been doing this for what? It's been rallying for almost 2 years, right? January of next year, just a few months from here, is going to be 2 years that the dollar's been rallying, right? So we kind of look at this and go, well, it seems like the dollar may be just about done. Everybody else has been taking that gut punch it all the way down, right? And now they're starting to react. And so it seems likely that we're closer than not to a dollar top. It doesn't mean that it has to be in right this moment or that it has to happen tomorrow, but I just think that we're probably closer to it than not. With everybody else kind of getting a little upset here, going, you know what, this is stupid. We're kind of really getting screwed here. And doing their thing against the dollar, right? So As far as QT comes in, yeah, they say they're going to ramp it up. I don't know that it necessarily starts the next move down. We'll have to see how far they pull with this, right? We'll have to see how committed is the Fed to actually continuing to tighten, and to tighten in a much more significant fashion than what it has so far. I don't necessarily think the Fed can keep doing it. They're talking big, but I don't think that it's something they can continue to do. I think we'll see unemployment continue to rise, which, he's out here talking big last time, right? Oh, people are going to lose their jobs. Oh, the housing market's probably going to see a correction. Oh, and kind of playing it off like that. But, let's face it, guys, the Democrats have their elections coming up here, right? What about another month or so? And correctly or not, everybody's going to kind of view it as their fault that, inflation's where it's at and everything is like it is. And so I think, the Fed, it's supposed to be this hands-off kind of thing, its own little thing, but, it always bows to political pressure. So we'll see, what exactly goes on with there. But not just that, again, we've got the fact that the economy is doing everything it's doing, right? And we have all this pressure, and things have already started pulling back, and the Fed continues to do things, and everybody's like, oh, look, the Fed's making it pull. Well, no, it was already, the economy was already kind of pulling back before the Fed did anything. So, the Fed's got a lot of pressure to kind of potentially slow down what it's doing. And so we'll see if we'll see if they do it. We'll see if they kind of bow down a bit here and do that, right? Yeah. So, again, kind of like news, right? So I often talk about how the market, whatever's going on with the news is already priced in, right? The news may give you like a knee-jerk reaction, but the trend is already set with social mood, right? And so, you can always get, these knee-jerk reactions, but overall, the trend itself doesn't change based on news events. It doesn't change based on what the Fed's doing, right? Because the Fed is always behind, right? Just think about how the fact that, inflation got so far out of hand, right? And then the Fed comes in. So, I just want to make sure you guys are paying attention to what's actually going on here versus what people are saying, okay? Let me see here. Who's here? Deadly123, what's up, man? Michael Otis says the Dixie is breaking up out of a triangle. I'll have to check that here in a minute. Baltazar, good morning. Good to see you here. Brian Riley, hello, sir. Good to see you. Andrew says everybody now is saying that Bitcoin will hit the 12,000 range. Reminds me when everybody was saying 100K. Yeah. Again, we kind of continue to monitor that and see what's going on, right? Again, in just a minute here, we're going to talk about 3 possible scenarios here. I've got 1 bullish and 2 bearish scenarios, but even those bearish scenarios aren't looking like what people are thinking. So we'll kind of look at that here in just a minute, right? Let me see here. Shu says, feels like you can't leave. Hill country was nice over in Texas. Yeah, it feels like you're there forever. Let me see here. Andrew Bennett says another $12 billion to Ukraine. Yeah, you talking about the U.S.? Yeah. Don't forget about raising taxes. Yeah. All that stuff going on there. Claudio, good to see you, man. Let me see here. LXT says legacy dumping in. TLT as well. Let me see here. Michael says, Powell discussed CBDCs today. Absolutely disgusting. Well, of course, central bank digital currencies, right? I mean, this is something we talked about 2 years ago. You guys remember, those of you that were with me, I talked about how this bull cycle would be when we saw real serious talk about central bank digital currencies, and probably even some of them started to produce it. So we've got China doing theirs, of course, right? We talked about how this cycle we would see the stronger institutional investment into Bitcoin, right? And we've seen that. Matter of fact, we've even got cities kind of jumping on it, like Miami, and I think New York City wants to do it too. We've got countries like what is that, El Salvador, that kind of jumped on the Bitcoin bandwagon. Sadly, right at the as of right now, they're down like something like 50%, which isn't good. It makes basically that kind of performance for the country doesn't look good for its bonds that it tries to issue, right? Makes less people interested in getting them. But, if you believe in Bitcoin and you believe maybe this is a bottom or nearly so, then, buying, El Salvador's bonds may not be such a bad thing, right? You might be getting people who are jumping out of them on a fire sale, right? I don't know. People get scared. What's going on? Again, everybody, even the big guys get, they're going to get scared, at the lows and get exuberant up the highs there as well, right? Merrick says the black count is still in play until it's not. Yeah, so let's go ahead and talk about this. We'll go ahead and talk about the bullish count here, the black count, since it's the first one, right? So this assumes that the low back here in June is still in, okay? This assumes a wave 1 and then a deep wave 2 retracement of about 90%, right? Now, we can see that right now, so far, that wave 2 found the EQ of this. This is that blue daily demand structure, right? And it found the EQ on that. And off that, we've now got, a high, a low, a lower high, a high, a low, a higher high now. So potentially, and then maybe potentially a higher low here, right? So if we look at this, let me kind of zoom in here a bit so we can kind of see this count playing out here, right? So this would suggest that we've got basically a 1 and a 2 here. And then 1, 2, 3, 4, 5 as a leading diagonal, right? Now within wave 5 here, we've got 1, 2, 3, triangle is 4, and then 1, 2, 3, 4, 5 looks like an ending diagonal. All right. Now this is broken out above this black wave 4 here. So if the black count is correct, then this is the first clue, excuse me, that wave 2 is complete, right? So now what we need to see is we need to see price remaining above wave 2 here, right? So we've got the 50% retracement. It's coming on down pretty good here. The 50% retracement at about 19,236.5. The 61.8 retracement of this wave circle 1 here is actually right exactly at the hourly pivot here, right there around that. I don't know, was that around 18,965 or so? Okay, so I'm looking at this as potentially first target, second target here. Okay. Now coming off here, it does look like we've got 1, 2. This is a third wave right here, right? Let me see here. Yeah, it looks like 1, 2, 3, 4, 5. So that's A, B, maybe C here. 15-minute well oversold Stoke RSI and RSI. 30-minute Stoke RSI just about bottomed out and oversold. RSI itself is just now hitting oversold. Let me see here. Looks like that 15-minute, let me see here, the 15-minute pivot. Nah, it's a little bit up here. It's a triangle support, right? So generally, we look for triangle support as a good area for a target, which again is right above that is at 50%. Why do we do that? Because the triangle is just consolidation sideways, right? So all this consolidation would provide support, right? Potentially. So if you ever think you have a triangle and you've got price pulling back, initial target, make it that triangle, at least for a bounce potentially, okay? 1 hour, we're almost bottomed out. Stoke RSI. RSI is almost oversold. So, I mean, a lot going on here. 4 hour, of course, we're still pretty close up here with what we've got going on. The daily, man, look at that daily candle doesn't look so good at the moment here, right? But, again, a lot of hours left in the day, so we could rally back up and close up much higher here. Other possibility is potentially, I don't know, where's a good example here? Sometimes you have it where it clears the way and then you go up higher. So, I don't know, maybe like this one right here, right? Where you've got this big wick up and then you came down, but then there was no follow through. It just continued up higher. But right now, as far as the daily goes, more volume than yesterday, and we still got more hours to go. So we definitely want to see this closing up with a larger candle spread. So this candle spread yesterday was 419.39. We want to see this one bigger than that because we do have more volume. And so you want to see that if there's an increase in effort, increase in volume, you want to see an increase in the candle spread to go with it. If you're seeing a decrease in that candle spread, that's going to indicate that you're, producing more effort and getting less result, which is usually a recipe for reversal of some sort. As far as the daily goes, you know, the RSI here, we're just now breaking into neutral here. Stochc RSI is just on the bullish side of neutral. So, you know, your daily has a lot of room. It's just that 4 hour that's kind of stuck up there at the top and kind of coming down a bit. Your short term, you know, your 1 hour, your 15 minute, your 30 minute are all down or almost down. So, you know, again, we're going to see what goes on here, but initial target just a little bit lower. Right now we're bouncing. You can see right here, we're bouncing right off the descending channel EQ. So I'm not even sure what that would be in terms of retracement there. It's a little bit too low to be 38.2. Let's see. Yeah, see, it's right there between the 38.2 and the 50 right there. But if we can get this breakout higher, well, so what are we looking for then? Well, that would suggest if we rally off the 50% retracement here at 19,236.5, that'll give us a minimum expected wave 3 target up here at 22,839.5. If we go all the way down to the pivot, wave 3 target's a little bit shorter there at 22,569.5. But these are just minimum expected. We could get a larger push up here higher. And so, you know, again, we would get a 3, and then we would look for 4 to pull back to the descending channel resistance there, which, as you can see here, also happens to be that daily pivot area. So we get a 3, a 4, and a 5. Now, with that, that would also just be 1, 2, 3 up there, right? So then 4 would pull back again toward that area, and then 5 up. So if we, you know, get a rally off of these areas, then that's what we're looking at, right? Now, here's the thing. If we break out, what we want to do is we want to break out above wave B here, right? So this second target up here, 22,839.5, will get us above this wave circle B resistance. Now, if we do that, if the black count is correct, then that's going to add confidence to the count. It's going to say, okay, now we should be looking for wave 1, 2, and now we should be looking for wave 3, which is, you know, again, way up here at about 30,000.5, 30,600. Okay? But here's the other thing. There are 2 bearish scenarios, and one of them's a triangle. And if it's a triangle, then we could still see a breakout above wave B here in that triangle. Okay? And we're going to look at that here in just a minute. So if you are bullish, you want to see a rally off one of these 2 target areas down here, break out above wave circle 1, break out above wave circle B, and then break out above wave 1. Because once you break out above wave 1, that alternate triangle, bearish triangle, will be invalidated. Okay? So that's kind of what we're looking for if we're going to do that, all right? So, let's jump over. So that's that. So our first bearish scenario says, okay, it says 4 is still in progress, okay? It says this, instead of this being 3 and 4 up here, it says this is 3 and this is 4 up here. Whoops. This is what we'd be looking at here, okay? And I'd have to, you know, fix the interior count there. But nonetheless, it would say this is 3, this is 4, and we've got an ending diagonal going on here. Now, with this ending diagonal, it would suggest that we've got a 1 and a 2, a 3 and a 4, and we're looking to do 5, right? Well, 3 is definitely shorter than 1. So that means wave 5 would have a limit. I'm going to go ahead and put this down here at this limit. A limit of 15,727.5. Oops. All right, because wave C or wave 3 cannot be the shortest of waves 1, 3, and 5, right? If we go up, measure up here, you know, as you can see, this would be the 100%. Wave 1 is larger than that, right? So wave 3 is smaller than wave 1. That means wave 5 would have to be smaller than wave 3. Now, what is likely to happen in this situation, actually, is that we'll probably just get a dip below this swing low here, right? This June swing low. And that would be what I've been warning about since up here. And I said, if we break down, we might just likely get a dip below that swing low, catch all your breakdown traders, right? And immediately flip back up, and it puts them immediately underwater. And then they have to scramble to cover their shorts. They have to go long. And that just gives that fuel on that breakout, right? In terms of Wyckoff, that would make this accumulation down here, right? 3+ months of accumulation, right? And that would be a spring below rallying back up. So I mean, we could potentially be seeing play this, right? But this becomes more likely once we break down below what would be this this wave A here, right? This 18,529, because over here, that's this right here. Let me see here. Make sure I can read this. Let me see here. Actually, it's this one right here. This wave 2 here. Yeah, 18,529. Yeah. So if we break down below that, then that says this can't be 1, 2, 3, right? So then I would default to this right here and say, okay, we're coming down, but wave 3, if this counts correct, if this isn't any diagonal, then it can't go any lower than the 15,727 kind of area. But I think it would just be a dip below and then push right back up, catch everybody off guard, because everybody wants it to go down. Everybody's giving up. Everybody thinks it's going to go down, right? Now, here's the thing. If we look at, if you guys are following me on Twitter, I apologize that I haven't written a whole lot on there. I haven't posted a whole lot. It's, with the move and everything, guys. But we've got this right now, right? So I posted this from Glassnode, right? And they said that the 7-day moving average of the exchange inflow volume for Bitcoin reached a 23-month low, right? And so this was back on the 26th. So yesterday they said this. Now, what do we know? Well, we know that generally, the idea is that if we've got less Bitcoin coming onto the coming onto the exchanges, then that usually signals we've got accumulation going, right? If we're getting more coming on there, then it, suggests that we're going to be selling, right? So, if we look at this, and if that still continues to hold true, well, it makes the idea that we're probably, bottomed a lot more likely, right? So we'll see. We'll see if it holds true here, but that's generally what we would expect, right? So that's the first kind of scenario, right? Now the second bearish scenario is this right here. Again, would suggest that this is 3 down here, but that maybe wave 4 is printing a triangle, right? Now, in that case, I would expect wave C to pop out above wave B here. And that's what I was talking about earlier. Remember, I said, if you've got the black count and we break out above this 22,800 level here, if the black count's correct, then that's going to add confidence to the count. And we start looking at 1, 2, and we start looking at wave 3 up there at 30,000 plus. But until we break out above the swing high here, again, it's still potential, possible that we have a triangle going on here, a wave 4 triangle. So we could get ABC or WXY above that terminates above wave B here, right? Probably pretty close to this R5 pivot around 23,200, 23,400 kind of area. And so that would be C, and then we'd break back down for D. So if we got that, if we broke out above that like that in 3 waves, and we start coming back down in 3 waves, well, then I'd look at this triangle. Again, the idea is that we'd get a thrust out of the triangle when it's done, right? So we'd have, let me see here. Basically, A, B, oh gosh, it's just terrible. Let me try this again. So we get something like this, this ABC, right? And then ABC, and then ABC, and that would finish E, and then we get a thrust down, right? But again, I think that thrust down would be just enough to kind of get below this range low here, right? Same idea as if we're looking at that ending diagonal, right? The idea that we just get below it and then back up. And so I think that's probably most likely to happen. Now, just because I think these are, 3 of the most likely scenarios, it does not mean that we can't go down to 12,000 or whatever, but it means I think that the market has to prove that it's going to go down to those levels. I think at this point, there's so much pessimism and so much, oh my God, it's going to go down and whatever, that I think there's a possibility, a good possibility, that if we do break down, that we'll just get this spring here and right back up into it, right? So that's what I'm watching for. Do we get the breakout above wave B? If we do, then do we get the breakout above the swing high? If we do that, then we're 1, 2, and 3 up. If we get the break above wave B here in 3 waves, and then we start coming down in 3 waves, well, then it starts looking like the triangle here. If this is the top right here, or we even go up a bit higher, but we don't get above wave B, and we break back down again below that 18,529 here on Coinbase, then it's going to suggest that we're looking at this ending diagonal probably. And I mean, really, that's kind of how simply I'm looking at it, guys. It's really just those levels and these 3 ideas. Now, if we do break on down below that swing low and we keep on going more than just a dip down below, in a spring type thing, well, then we look at the count, we maybe start adjusting things. We keep an open mind. But if the dollar is topping, right, then there's not a whole lot of reason for Bitcoin to really kind of travel down significantly lower, right? So we continue to watch the dollar. We'll see what's going on. We'll look at that right now, as a matter of fact, right? Jump on over here. Let me see here. Where is my invalidation level on that 1-2 wave up? Which 1-2? Are you talking about the big 1-2 here? Oh, breaking down below the swing low. I mean, really, with what I'm looking at locally here, if we're breaking down, again, my idea is that if we're breaking down below this, what is it here? God dang it, this one. 18,529. If we're breaking down below that, then that invalidates this local black count, which invalidates, most likely is going to end up invalidating this larger black count. So, I mean, really, that's kind of it. If we're breaking down below that, then like I said, I start looking at this ending diagonal. Yeah. Yeah, daily at the moment sucks, but again, many hours until the end of the day, so we'll see what happens, right? Let me see here. Jeff Bear, what's going on, man? He says existing home sales have been going down for 7 months in a row now. Yep. The commodities are collapsing year over year. CPI will continue to go down as energy and used car prices, which contribute a lot to CPI crash. Now, yeah, exactly what I've been saying here for a while now, right? So we look at those largest contributors to CPI, which is energy, rent, and used cars, right? Or cars, I guess. And all those things are well, we know houses are coming down, right? That's a big, we know oil's been coming down, right? And we know that, that rents are coming down, right? So yeah, these largest contributors to the overall CPI are all coming down. So, it takes a few months for everything to kind of push into that. But yeah, I agree. I think we potentially see that coming down. And if that's coming down, then what reason does the Fed have to continue raising rates, or at least to continue raising them so significantly? And here's the importance of that. Everybody's worried about, is the Fed raising rates? Well, no, you just need to be worried about, is the Fed raising it significantly? Is the Fed going to continue to do 75 basis points or more? If they're not, if they're coming down 50 basis points or 25 basis points or whatever, all of a sudden, that's bullish. Because the market is then going to start pricing in Fed pivot in 2023, right? And so the Fed eventually turns rates negative, right? Down the road there. It's not that the Fed has to stop raising rates. They just have to stop raising them 75 basis points, 100 basis points, that kind of idea. If they stop doing that, the market starts getting really antsy for some rally, right? Speaking of which, the other thing I showed here recently, excuse me, was this right here, right? So this is the options bubble, right? Friday, this is last week Friday's 8.4 million contracts equals the largest SPY put volume. Remember, these are options to sell of all time, right? And so, those of you who've been following me, I often talk about how the markets get really offsides. We talked about that with the dollar in January of 2021, how everybody was so negative on that, right? Everybody was so short on that. So, I think there's a warning in that. The markets can get too offsides, and it makes them ripe for a strong move in the other direction, right? Yeah. So, again, we see these little things kind of coming out there. I think consumer, what was it that was just released here? Oh, was that the consumer? Oh, does anybody know what was just released? Oh my gosh. Well, I'm talking so much that I completely lost my train of thought. And I can't remember what I want to talk about here. Let me see here. All right, so we've got that the consumer debt hits the record level for most Americans except the wealthy, right? But we also, there was also a headline here that says that consumers are paying off their credit cards fully in a larger degree than they ever have before. So that's interesting, right? Excuse me. And so now, let me see here. Oh, what is it? Was just, man, I might have to think about this for a minute before I cannot remember which one I was looking at here. I thought I had it picked out, but it doesn't look like it. Let's see here. So anyway, so we've got this going on, right? And so again, the idea that, well, we'll look here at the dollar, right? So the dollar's popping up here, and so if we look at this, we go, okay, well maybe the count here is 5 down here, and this is A, and this is B, and this is C, right? Now, we're getting kind of close here. You know, if we break out above 114.529, that's going to say, obviously, that that the dollar is not in, right? The top of the dollar is not in. But I think right now we kind of look at this at the moment and go, okay, well, maybe we're looking at this right here. Let's see here, 1, 2, 3, 4, 5. Yeah, is that lower? 113.098, 113.09. Yeah, that's fine. All right. So now we're saying 1, 2, and then 3, 4, and then 5, and then 1, 2, 3, 4, 5 gives us A. And then it looks like ABC, so W, X, ABC would be Y. And then here, getting that wave C. Now that, you know, it's a deep wave A and it's a deep wave C, so we'll have to see what happens. Usually when they're that deep, you know, I'm often kind of defaulting to the idea they're going to break out higher. But we'll see there. If they do, well, so what are we looking at with the dollar? Well, so okay, let me break this out here a little bit further out. All right. All right, so the idea is we're looking at 3 and 4 here, right? Okay. Now, based on wave 4, we would generally look for a wave 5 target right up here around 112, 323, right? And so we've broken out above that. Now, if I look at this, I would go, okay, well, you know, maybe 1, 2 as a running flat here, or at least a 1, 2 here, right? And then this may be 3, 4, and we get a 5 coming up, right? And so if that's the case, then minimum we're looking for a breakout to give us a target up here of about, let's see here, 115.475. And that would be if this is 3, 4, and that's the 5, and then that ends up being the wave 5, right? You can see here on the 4-hour, we've got a lot of room to rally, so we could do that. The other possibility is, you know, this is 1, 2, right? And then this is 1, 2, and 1, 2, 3, 4, 5, right? So we'd still get the rally up to here, but that would only be 1, 2, 3. So we get a fullback here, 4, and then a 5 up, and then that would still only be 1, 2, 3, 4, 5. And then you get closer toward that 120 target that LXT is talking about there, if we do that, right? So yeah, you know, definitely some possibilities here. We just want, you know, again, guys, I think too many new traders get in here and they want to, you know, fight for where the, what's going on, right? They want to be right rather than profitable, right? And so that in their mind, they have this target of where things have to go. They absolutely has to go. And then they kind of miss everything else that's happening there, right? Now, remember, right now, this swing high right here is this EQ, right? So this is that daily, I believe it's the daily, maybe it's the weekly. Let me see here. There we go. We can look back here on this monthly, right? So this gives us this supply structure up, this really large supply structure. We've hit the EQ of that. All right. So, that gives me pause for a minute. I want to see if we can get that dropped out of there, right? We can see that the monthly RSI here is 81.5. It was 82.87 over here in 2015. 2015, that was that short deflationary period I talked about. And then again, right there in 19 going into 20, this area right here. And so, yeah, we've been oversold for, gosh, dog. We have been overbought, I'm sorry, since August of 21. So, just about 13 months now on the monthly Stochh RSI, right? And RSI itself is getting up to levels rarely seen before, right? The last time it was up here was that 82, just a slightly bit higher there in 2015. Over here, we had it at about 82.24 here back in 85. So, I mean, these peaks, or peaks are just about, are usually where we're going when we're breaking out overbought here, right? Yeah, it went up a little bit higher, but then came down, and here we go up again and we're overbought again. So, again, the idea is we're probably closer than not to the top, but it doesn't mean we can't challenge this swing high over here from July of 01. This was right after the leading into the dot-com bubble up here, right? And then we had the great financial crisis here. And here we go again with the pandemic and everything else coming up over here, right? So yeah, we could still do that. But we'll see how it plays out. But definitely in these larger time frames, we're kind of up there where we would generally expect to be topping out. Or pretty much nearly so, right? So we'll see if we can get that. But as long as the dollar continues to rally up higher, generally we should expect overall for risk on assets to come down. Now, the one thing is, here we go with the dollar rallying up, right? Well, right now it is. But, overall, Bitcoin's kind of held pretty good, right? So we had this big push up here. Now we get this break on down. We're coming to that lower target there. Whoops. There we go. Our 1 hour RSI is about to dip into oversold. Stochh RSI bottomed out. Here we go. Right around that secondary target. It's a 61.8 here, right? But remember, we're still valid through all this unless we drop down below this low here at 18,529. At that point, it becomes the idea of, hey, we're probably, again, looking at this right here, right? So, yeah. Let me see here. Let me see here. Jeff Bear says a lot of potential for deflation. The recession also disinflation or deflationary. Yeah. Everybody's talking about inflation, but again, the same thing that I continue to show you guys year after year. Everybody jumps in at the extremes, right? Whether it's everybody's extremely bullish or everybody's extremely bearish, right? And everybody's like, oh God, inflation's going to do this huge thing and whatever. But what if not? What if it's topped out? A lot of people are going to get caught flat-footed, right? They're going to be the wrong way on that, right? So we'll see. We'll see what happens here. Let me see here. Kind of put it back over here. There we go. So yeah, again, it's just about understanding what are the possibilities, and with those possibilities, where are your validation and validation levels? The same thing I tell you guys episode after episode that we do here, right? Session after session. It's all about that and your proper risk management, right? So yeah. Let me see here. Let me kind of catch up with you guys here. Andrew Bennett says maybe see a death cross on the 5200 MA on the weekly. Are you talking about Bitcoin? Let me see here. Okay, so something seems very interesting. Bitcoin weekly showing rejection at the 200 MA. This is a first, I believe, for Bitcoin. This could be the indicator of that 69 top wave 5 is valid. Well, you know, possibly, yeah, possibly. Let's kind of get this over here, right? Do I have that 200 over here? You said 200 MA, right? 200 MA, yeah, let me see here. Where is it? Is it that one, I think? Yeah, there we go. There's the 200 weekly MA. Let me see here. There we go. All right. Let me see here. I mean, you know, it only goes right here on Coinbase, right? Let me change to the other one. The BLX here, because it's got a you know, larger time frame, so those moving averages will show a bit more. Let me see here. All right, so here we go with it right here. Let me see. Look at that hash rate. Nice big move open there. Still haven't got the blue buy signal though on it yet. Still haven't got that blue buy signal on it yet. Remember, we're getting this rally here off this bullish divergence on the weekly MACD here, right? Talked about that. We got a bullish cross here on the MACD, but we'll have to see if we can get any higher there, right? We do have some bearish divergence between these two swing highs here, right? On the green here and the green here on the this right here, right? Well, I don't know, actually. It should have been this one with this one right here, which we got, and then we got the pullback. So it should be more local right here now, because it was this one to this one, then we got the pullback, and now we've got higher highs on the histogram and higher highs there on price. So yeah, we don't have that anymore on that. Let's see here. So 200 is the orange line on this. Let me get rid of these other ones here real quick. All right, easier to see. I don't know, we were rejected right here. We reject, this is 2015, September. We rejected right there. So, you know, of course you might go, oh, well, that was just a little one. These are bigger candles. I mean, it's the same idea you're looking at, though. Was it rejected or not, right? So, yeah, you know, rejected so far right here, but we're range bound, you know. So is this, you know, just a double bottom here, right? Is this right here what we need to watch because of the depth of that, right? Is this potentially a double bottom right here, right? And so then you'd look for a breakout above the swing high here. That's at black wave 1 right up there, 25. Well, on the BLX here, it's around 25,198, right? So if this is a double bottom, and we reverse and break up out of here, then we're probably looking at, you know, pattern target here. Whoops. Pattern target here of about 35,740 or so, which, as you can see here, takes you right where you would expect it to find resistance, right? Look at that. Right there. So, I mean, you know, the target makes sense on a double bottom here, but you got to get it, right? You got to get the follow through. You know, again, I've gone through and showed how, you know, a lot of what's going on here is the same thing we kind of saw back over here and here, right? With our RSI and Stochastic RSI and hash ribbons, all kind of pretty similar through those areas. So we'll see. We'll see. Again, on the weekly, Bitcoin's only dipped into oversold here 3 times, right? Here they are, right here, currently, right here, right below, right before this was December 10th. So a week later, we had the price low, right, for the bear market low there. And then this, of course, over here is that January 2015, that bear market low there. So here we are again, right? Is that the bear market low or what? Heading up. And now it's larger, obviously, than the other 2 drops, but nonetheless, it's the only 3 times Bitcoin's ever kind of dipped below, you know, dipped into oversold there. So, you know, we'll see. We'll see what goes there, right? Let me see here. The 300 MA shows support for now. Yeah. Yeah. So, you know, again, structurally, quite possibly a double bottom here. Even if we were to dip down and get a slightly lower, say 17,000 or so swing low, I guess probably be like dipping into this weekly demand structure here, right? So it's right there around 17,230 or so. So, you know, even if we got, say this is an any diagonal here. So even if we hit that low there, it's still basically a double bottom here. And we'd look for a breakout above this, you know, this swing high to give us that target up there at around 35.7 and change, right? So, and we would expect this to be a pretty strong move up here, right? Because if this right here, if this range plays out, right? So if this range plays out as accumulation, if it does, right? Then what we would be looking for is a sharp move. You know, I mean, if we were to get a spring here, right? Say, coming down here. And we'd look for a strong move and probably like a breakout like this, and then a breakout higher like that. I think that's probably what we'd be looking at in terms of that. Now, you know, we could potentially dip on further into this, but I think if we're to, you know, whether this prints as a as an any diagonal or as a triangle, that breakdown, that fifth wave breakdown, I think it needs to find support in this 23rd of the week of 23rd of November 2020. I think it's got to find support in that demand right there if it's going to do that. I think if we lose that, this is, what is this? 16,232 and 47 cents on BLX here. If we lose that, I think then, you know, you've got a lot more support for the idea that we'll head, you know, 12,000, you know, something lower like 14, 12, whatever, right? So, yeah, exactly. It would be 5 down if this is the top of the top. If it's not the top of the top, then it's just that ABC as it looks. I mean, again, you know, right now, the way we look at this, ABC, right, is WX, ABC is Y. Again, that breakdown was what, like not even quite 50%. So yeah, so we'll have to, you know, see how that turns out. It really just determines, you know, what's going on here. In this area right here, if the black count is correct, then what everybody's feeling right now, and everybody, oh, it's got to go lower, and everybody's just depressed, everybody swears it's got to go down lower. That's what you expect at this right here, if that black count's correct. That's exactly the wave psychology that you would expect here, which is why if that black count's correct, you know, you get that strong rally up, then everybody's caught off sides, and that's why it becomes a strong rally, because all of a sudden everybody jumps in, right? Not everybody, but those that are going to jump in, right? And there's nobody else really selling into it at that point. It just eats it up and rallies on up through. Most people get scared, though, and they wait, and then they wait, and then they get in up here, and they miss all this, right? Is what it is. We're trying to find support right now on that. Where are we at with the 15-minute? Yeah, you know, well oversold here. Let me see here. I mean, you know, well, the 5-minute here says 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. I mean, so, you know, we have 5 down for A here, and then we got B, and then we've got 5 down. Now, I mean, again, it could be 1, 2, 3 as well. So, yeah, we'll see. Jay can play. What's up, man? Let's see. So, yeah, so, you know, we'll see what happens. Again, you don't want to assume it has to do something. That's the whole thing, guys. You know, you don't want to assume that no matter what, it's going to do whatever you think it needs to do. You know, you have an idea But that idea needs to have validation and invalidation levels. And you have to be open enough to flow with it if it doesn't do what you expect it to do. Right? So right now we've got, I think, what I think are the three, right now anyway, the most likely scenarios if it's good, 2 for the bearish and the 1 for the bullish if it does. So yeah, we'll see. We'll see what goes on here. Let me see here. Let's go jump over here to, let's look at the Nasdaq Composite here real quick. All right, so we had the gap up here today. So 2 days ago we had this nice kind of hammer candle forming here, right? And then we gapped down and rallied up and closed back down. And then today we gapped up and now we're back down here. You can see that the daily RSI is oversold. Stochc RSI is bottomed out and oversold here and going to cross potentially bullishly here. So we'll see. We've got a lot of fighting going on here between buyers and sellers down near the swing low, right here at this 10,565 area. If we can break back out above this swing high here, then we're looking at the daily pivot. The daily S1 pivot followed by the daily pivot. Those would be kind of the targets you'd be looking at. And the closer we get toward that daily pivot, the more this starts looking like an ABC, just a really deep wave too, kind of like with Bitcoin, right? More than it does look like 5 down. But until that happens, again, that trend is down, larger term and local here. And, we kind of, default thinking should be further down, right? Until it does break out. So it's the same thing we're looking on Bitcoin, right? Default idea is that it's headed down unless we get a breakout above that wave B, right? That wave circle B at 22.8. And even then, we still need to see the breakout above wave 1 to kind of invalidate the idea that a large triangle is playing out, right? So yeah. Let me see here. TNX was just about at 4%. That was quick. Yeah. These things can move kind of quick, guys, especially with with everybody kind of on edge, right? With what's going on with the markets and everything. Everybody unsure. Everybody thought one thing and now they're thinking another, right? Let me see here. The Dow. Whoops. So the Dow is the one that's broken down below the swing low here. So I've got a wave circle 3 target up there, right down there at around 27,759, 27,750, 760 kind of area, right? So, breaking down here, we do have this bullish divergence still trying to print here. So we'll see what goes on. Now, again, I've got this as a 1, 2, and working on 3, heading down of interior of the larger wave 3, right? But remember, it's only the third wave down, so could always play out as an ABC, right? So we need to pay attention. We need 5 waves down, on this time frame here, 1, 2, 3, 4, 5, right? This larger time frame to say, okay, the top's likely in. Now, if this is this wave parentheses 3 down here, we should see an acceleration to the downside. Because it's that wave 3, right? At that point, everybody goes, oh, crud, I'm in the wrong way. I got to get in, and it breaks down strong. We're not seeing that just yet here, but we did have a rally up into that resistance and a rejection here right now. But again, if we jump out here to the daily, we're oversold, right? Stochc RSI and RSI oversold. It could go down lower here. Weekly RSI is not oversold, but guess what? Potentially printing bullish divergence, right? We had bullish divergence from this low to this low, which gave us this big rally, right? And now we've got it from this low to this low right now. You can see it moving up, right? Notice where we are on the weekly. We gapped over here. So we got this weekly gap over here the week of 24th of February of 2020. We had a gap again here on the week of the 9th of November of 2020. Same general area, right? And here we are again coming to to that gap area, right here, that support area, right around 28,915, right? So it'll be interesting to see if we hold that and it goes up, right? But here's the thing, on the weekly, I mean, this is pretty clearly just, 3 waves down off this here. So if this is to be an ABC, then this would probably have to be like an ABC as a W and an X, and then an ABC as a Y. So then we get a W, X, Y here. And that's what the count would have to be if we were to do that. But what we would need is we need to see a breakout above this swing high here, this 32,504.04. If we break out above that, then that locks this in as 3 waves down. All right, so I hate to do this to you. So the other possibility would be we'd have a wave 1 or a wave A down, and then ABC, ABC, and we'd have 5 up probably toward this 35,500 area. And that would be just like some large, again, A, B, C, expanded flat for either wave 2 or wave B, and then we come down lower. But here's the great thing. Whether it was to do that and then head down lower, or whether this was to be like 3 waves down and then head up higher, in either case, the idea is that it would rally up, right? So you don't have to know which one's correct at this moment if we were to get that rally started. You would just have to know that in either case, you're rallying up, right? Does Vpvr matter on the indexes? Yeah, they matter everywhere. Yeah. If you ever have a question about volume on the indexes, guys, remember, you can play the E-minis for those indexes at the CME, right? So, for instance, I usually talk about, like with the Dow here and the Nasdaq Composite, we're looking at the indexes. For the, what is it there? I'll pull it up here. For the S&P, right? I'm usually looking at the E-minis, right? So the E-minis are those, the tradable futures for the index, right? And so then you get volume profiles with you here. So that's where you kind of want to be looking with that, right? As you can see, we are, let me see, do we get it? Looks like we may be just now breaking down below. And again, so same ideas with the Dow there, right? Looking at that same kind of idea. Is it 1, 2, and then 3, or is it maybe some sort of 1 or A and then flat, right? Because if I look at this, we've got a major rally, pullback, and rally. Here, decline, rally, decline. So again, the odds would be that either this is going to be an ABC down or a WXY to finish A, and this is an ABC for B, and then this is an ABC or WXY for C, right? Or again, it's going to be wave 1 or wave A, and then 3 up for A, 3 down for B, and then 5 up for C to get us a flat correction for wave 2 or wave B, and then we get wave 3 or wave C down lower. I mean, you see how this can drive people nuts here trying to figure out, because everybody goes on and says, oh, well, is the bottom in, is it not in, and if this is just going to be a flat correction, it'll look like the bottom's in, right? And then everybody go long finally up here, and then it'll top out, and then it'll come back against them, and then they'll lose more money again, right? So, I think, the best thing to do is just to be a trader. Trade it more locally. Wait till you're getting those larger confirmations as for whether or not it may be, bottom in or it's heading down lower. You want to make sure that bottom's in before you're investing, right? So trading is a great way to get in there and make that money while, you're just kind of working the, whatever the, your more local price action is, waiting to see if on the longer term you've got more of a bottom in there, right? We do have bullish divergence building right now on the E-minis here on the 4-hour. The S&P E-minis. So we'll watch and see how that plays out. Because we break down here, we look for initial target here at the S1 pivot. Oh, that won't be a wave 2 there anymore. We'll get rid of that. But very likely could, again, still be ABC up for A, ABC down for B, or WXY maybe even. But yeah, looking for this breakdown toward this S1 pivot, and then we'll look for a breakout back above, you know, this 3723.75 area. You want to see a nice impulsive breakout above that to kind of signal, okay, we might be headed up. But like I said, in either case, whether this would be an ABC and done a really short C here, or whether it's 1 or A and then a flat correction here, that flat correction, you get an impulsive breakout above this level, we should be targeting back up here above wave 2. So wave 2 is at 43.2750. So if we break out impulsively above this area, we should be targeting above there at least. In either case, whether it's going to go up and then come back down, or whether it's going to continue going up to new all-time highs, you know, in either case, it should rally above wave 2. What do we have as wave 2 up there right now? Or don't buy or don't be a turd and buy followers, right? Let me see here. Okay, so yeah, so this is kind of what we're looking at here, right? Again, your daily, you're oversold, Stochastic RSI and RSI, right? As we're trying to break down below that swing low there. If the black count's correct here, right, we got a 1-2, well, wave 3, minimum expected target here of 3456.75. So, you know, if we continue to rally on, you know, drop on down through that 4-hour, 1-hour, you know, S1 pivot there, then we should be looking down here toward this wave 3 at 3456.75. That's an interior wave 3 of this larger wave 3 coming down. So, yeah, you just trade it, guys. I mean, you know, I think traders too many times, they don't understand trading, right? New traders, they come in and they're like, oh, well, just tell us what it's going to do. Well, nobody knows what it's going to do. We can all get lucky every once in a while, but that isn't how you trade. You're not going to be a successful trader doing that, right? The idea is to understand what are the possibilities and why, and with those possibilities, well, where are the invalidation and validation levels? And then, of course, using proper risk management. If you can do that, then, you know, and you can, if you take the time to do, you know, to really practice it and do it, you're going to be a much more successful trader, right? This trying to guarantee nonsense is going to get you shot in the foot so many more times than it won't. So, yeah, you know, you might get lucky every once in a while, and heaven forbid you do, because then you'll think that you know what you're doing with the guaranteeing, and, you know, it's definitely got to do this. And that's usually when, you know, it takes one bad trade, guys. Lack of proper risk management, lack of understanding where your invalidation levels are. It takes one bad trade to wipe out everything you've worked forward to, you know, maybe in a year or, you know, year and a half. You guys see every once in a while on crypto Twitter, you see somebody on there, oh, I was up $2 million and now I lost it all. One time, because they didn't know where that invalidation level was. They weren't using proper risk management. Up $1 million+ and then lose it all. Right? So yeah, you definitely don't want to do that. Let me see here. Let me jump on gold here real quick, or silver. Let's jump on silver first. See where we're at with that. Silver's still wanting to push down more. All right, well, here's what it is. You know, I've got this right now as a 1 and then like an A and a B. And we've got a C here. Now the C, you know, we were looking at 1, 2, 3, 4, 5. With the new drop down here, it's possible maybe this is a ABC is a W and an X and an ABC is a Y. So this would have to be an ABC as well. So this could be like, you know, A, B, C coming down. Right now it's, how far has it dropped here? Yeah, we're only, you know, we're only right there around that 61.8, 65 retracement. The S2 here is like halfway between the 70.5 and the 78.6. Could also be, let me see here. 1, 2, 3. Wait, let me see here. 1, 2, 3. No, that's going to be a leading diagonal. So it could be, you know, I think here, what could this be? I don't think it'd be a 1, 2, and then 3 down here. But right now, you know, just kind of looking, if we're going to keep dropping further here, we've got this high volume node here right around these 78.6 at around 17.93. So if we continue to drop down and we get a bounce off here that carries us back above that daily pivot impulsively, then I want to look for a breakout above 19.745 here, and then we can look for the rally up higher. If we're breaking down below, you know, wave B here, well, we continue looking lower, right? Let's see what gold looks like. I think gold looks a bit different still. Gold's not been tracking with silver very well. Yeah. So gold, you know, has this idea that maybe we have this large expanded flat that may be playing out, but we're really kind of at that level where it's not really looking so much like a flat anymore, right? So this has to change. This would have to be 2, 3, 4, 5, yeah. Let me see here. Maybe something like this. If this is going to be an expanded flat. Excuse me. So that would have to be an ABC here. And then you have to have this ABC or WXY here. But then, you know, you'd be looking for this to break out higher again, heading probably up here toward that 1880, 1900 kind of area. To finish it off, it's going to do that. You know, you do have this bullish divergence that built up through this swing low over here. So you do have that. But, you know, you need to see some follow through up here. You know, I've had people for, God, what has it been, last 2 years, talking about how gold was going to a new high, and instead it's broken down, right? Remember Peter Brandt said, oh, look, when we were right here, said, oh, look, it's held, so it's definitely going up, remember? Hasn't yet. And so, yeah, I mean, you know, when you look at it there, excuse me, you know, gold's not looking good at all, right? As a matter of fact, right here, what it looks like is we tried to find some support right here at the lows, and then we're dropping down through it, right? So, I mean, again, I don't know that this really looks like an expanded flat anymore. It looks like this may be 1 and 2, and if it is, then, you know, if we continue to see this breakdown, it doesn't, you know, reclaim this range low here, you know, heading down here much lower, I think. You know, and I think, you know, maybe instead of 1, 2, maybe this will be an A, B, and then we get this 1, 2, which will give us a 3 around 1174. It'll give us a minimum 5 right around $1,000, right? Now, my only thing about that is, well, no, it does break it down below there, doesn't it? Yeah, okay. You know, and I've been talking about that breakdown to 1,000 or lower, right? You know, the idea that what we have here is an expanded flat, right? So you get A, you get B, and then you have C dropping down below, right? So, I mean, you know, just minimum expected targets would get us there. Along the way, though, I still want to just generally be careful around this 1250 to 1300 area. It's high volume node area. We're dropping below that, that becomes, you know, significant resistance there and makes, you know, sub 1,000 much more likely. Let me see here. I feel like the people that do not... Jeff saying, I feel like the people that do not like to hear how processed sausages get made are the same kind of people that completely disregard the possibility of deflation or property prices going down. Oh, man. Yeah, if you guys don't know how processed hot dogs and sausages and whatnot get made, you may not want to hear it. Gold actually isn't doing as bad as it looks on the dollar chart. Not sure what that means. You know, we've got a strong way down here from almost 2100 down to about 1600, right? So I mean, you're looking at almost 25% decline off that, off this high here, right? Oh, you mean gold versus other currencies? I got you. Okay, I see what you mean. Yeah. But you know, again, breaking down below here says maybe we've got a double top on here, and that has that target down here around that 13,000 area, right around the high volume node. So the other possibility, again, if we find support on this, is maybe that this is an A and this is a B and this is a C, and so it just becomes a running flat. Then we get a strong move up. But if we lose kind of this you know, 1250, 1200 area, I think we dip below 1,000 and we head toward that 800, 900 target, which just kind of takes us into this structure down here, right? So yeah. It's kind of interesting the way it plays out, right? But I don't see any reason to be bullish on gold anytime soon. Yeah, I mean, you know, again, we've broken down below the swing low here. I think locally, you know, again, this may just be 1, 2, 3, 4, 5, and then 2 is done at the pivot, at that weekly pivot. 3's in progress down there toward whatever I said it was. Did I say? Or maybe 1174 in there. So, I mean, you know, nothing, I don't know. You know, guys, when I look at gold, you know, those of you who have been following me for a while or have been with us in Discord here, you know, we talked about down here how this was the low and we were rallying to 2,000, right? Now, at the time, I was looking at the same idea, just at the idea that this would be A and we get a B prior to the swing high, just get a flat, right? And then pull down back here to the low. So I was off about, what, about $200, I guess? Right here, right? But still, the same possibility now looking at it. And I just continue to not see any reason to be overly bullish on gold at this point. Or silver. You know, again, silver looking at likely getting below 10 toward that $7, $8 area maybe. So, now it doesn't mean it absolutely has to, but, you know, this is the same thing I've been talking about for what? A couple of years now, right? So we'll see what happens. You know, we did good on the rally up through the high. We're doing pretty good so far on the decline off the high. So we'll see if we can continue to pull that in there. Let's see here. Excuse me. But yeah, so, you know, again, guys, when you look at all these charts, right, and you kind of see where everything is, you know, it all kind of comes together, right? It all kind of does more or less what you expect there. So we'll continue to watch it, you know, and see how things go. We've got a little bit more of a breakdown here. Let me see here. Not quite hit. Oh, now we're oversold here. Okay. For right now, let me see here. For right now, we do have hidden bullish divergence here between this swing low and this swing low. So, you know, again, we'll see if we can get it. We'll see if we can do it. The 4 hour is actually, gosh, it's actually fell quite a bit here. We're kind of at that support area right around the 43, 44 area on RSI. Stoke RSI is kind of taking its time coming down at the moment. Let me see here. Further retracement gets us what? If we get further retracement, let's see here. Oh, you know what? I had that off. I was looking at the swing low here. That's a 1-2. Aha. So we're right now at the 78.6 area right now trying to find support. I was off. I apologize, guys. I was pulling this all the way down here, which gave us the 50 and the 61.8. But actually, the 61.8 was the first one there. So now we're at the 78.6 here. Okay, well, so things get kind of interesting, right? So we'll see. Again, we're looking for the breakdown below 18,529 to invalidate the black count, right? And again, at that point, we then kind of look for whether, well, at that point, we're really kind of looking at this ending diagonal thing going on here, right? That 12-hour looks awful, doesn't it? Well, we still got half the time in there, six and a half hours still to go in that. But that 12-hour does look terrible. You know, and we've pulled back, I mean, in the grand scheme of things, we've pulled back to the area of support here, where we've got all this sideways, right? So, you know, we'll see how it plays out here. What does that daily look like? That daily still got all that room. Ugly candle, of course, but, you know, again, end of day is still another, what, 7 hours, 6 hours away? So we could see this rally up here some. Weekly, looks kind of scary here on the Stochk RSI, but the RSI and Stochk RSI are the same, look the same as they have on the previous two bear market lows, as I pointed out. So we'll see what goes on there. Monthly, let me see here. We've got almost as much volume as last month. But guess what, guys? So we've got another, what do we got? Another 4 days left this month? Right? 30 days. Yeah. So today, 1, 2, 3, I would say 3 more days. Just over 3 more days, right? And so we've got almost the same volume so far as last month, as August. August's candle spread there, look up right here in this area, was $3,259. Currently, we're at about $1,114. So just a little bit more than a third of this candle spread, and the volume's almost the same. So right now, we're saying significantly more effort, a lot less result, but we still have another 3 days left. I mean, if we're going down, you know, this is going to break down. So we'll see that candle spread potentially get larger there. You know, the question is, you know, do we get just a wick down below and back up, kind of like a bullish SFP kind of thing? You know, a spring in this area? Or do we get that further follow through down lower? We have this swing low over here at 17,580. We have this one at 17,567. So potentially a bit of a bullish SFP here. We've rallied up. We're coming back down. And so again, you know, if we look at this, you know, you want to see lesser volume and a higher low coming up off this next attempt at the low, right? So the volume is this one. Current volume is down here. So right now it looks good, but again, with 3 more days, you know, anything can happen, especially if we do see the dollar kind of pull back. We would expect then that Bitcoin would then pull up higher, which makes that candle spread even smaller as volume continues to increase, making it look pretty good both between this month and last month and between the June low and this one here, right? Because look at that. So you have this candle spread here. It's 11. This candle spread, the candle body here, is $11,000, almost $11,800 in height, right? With the volume right here. We're not that much further right here. And this is, you know, basically a tenth of that. So significantly more effort and less result comparatively between the swing low and the current candle. So again, a lot of demand showing up. The question is, can it follow through? So don't be discounting what we're seeing here in terms of price action and volume. But again, it is the monthly. We still have 3 more days left, and we have to see how it plays out. Okay? Corey, what's up, man? He says, just my gut feeling, but I've said all year they'll pump the markets leading into the midterms. I'm thinking at least to 25,000 Bitcoin by November. I mean, it would make sense, right? You know, again, the Democrats want to, you know, everybody blames them for everything. I mean, and I'm going to be honest with you guys, it isn't their fault, right? This is, you know, the whole system, this whole worldwide everything is a lot bigger than just, you know, the U.S., than just the Democrats, okay? But, you know, people tend to blame whoever's in office for how their economy's doing, right? And so, the Democrats understand that in order to get reelected, they have to get everybody on, enough people on their sides, enough voting people. And so, they've extended the student loan moratorium, right, through the end of the year. That takes them through that. So then you don't have that coming down. If they didn't do that, you would say not only is everything else going on and all this extra money that has to come out, but now I have to pay back my student loans. How dare you, right? That would be the thought. So they've moved that. Housing prices are coming down, but interest rates are still rising. So, yeah, I think, in terms of politics, I think if the Fed were just to raise interest rates by 50 basis points next month, I think, again, that would get everybody saying, oh my gosh, Fed pivot 2023, they've topped out. They're not going to do it. They're not going to be as aggressive anymore. They're scaling back. And I think then that gives everybody a positive mood toward Democrats coming into those midterms. So, I mean, even if we think about it politically, that would make sense, right? It's not, oh my gosh, it's been so bad, June, July, and August, 75 basis point rate hikes, right? Or, July, August, September, right? It would be like, it's always what's most recent in your memory that people tend to hold on to. And in this case, it'd be like, oh, look, they're dropping back, which means, which people are going to then say, oh, well, it looks like inflation, the Fed thinks inflation's pulling back. So things are good now. So the Dems are doing good stuff now, that kind of idea, I think. Yeah, so I could definitely see something like that happening. But, again, guys, at the end of the day, with Bitcoin, if you want to be bullish on it, the first thing we need is a breakout above the overnight, this morning swing high up here. At here on Coinbase, that's what is that? 20,383.15 cents. Your second thing then is you need to break out above this swing high here at 22,800, and then you need a final breakout above this swing high over here at 25,214.5. Those, I mean, if you want to be bullish on Bitcoin, those are the three levels you watch. That's it. If you want to be bullish on the idea that maybe the bottom's in, those are the three levels you have to break out above. Everything else in between that's inconsequential. Okay? So yeah, we will see how it continues to play out here. We'll see. Do we get support here? Do we rally and break out? Again, even if we break out above that 22.8, that could still be that triangle playing in there, right? Whoops. Where'd I put it? Potentially this triangle playing out, right? But so that's why, this one first and then this one here, but even that, the triangle would still be playing out. The idea we got a 3 and a 4 and then a 5, right? But if we break out above this swing high up here, well, then the triangle's invalidated and it's black count all the way, bottom over here. So yeah, I mean, that's kind of where we're at this point with all this. So we'll see what happens. But I'm going to get out of here, guys. I'm kind of overstayed my welcome, I think. As always, just remember, the only thing you control in the market is how much you lose. That's it. That's it. Stop trying to guarantee to yourself and others that price is going to do A, B, or C. Just do everything you can to learn everything you can about proper risk management and then apply it every single time. That's step one. Step two then is just taking the higher confidence trades, the ones that are more likely to play out. We don't enter just because there's a chance. Because even if you're using proper risk management, you're still going to lose money. You're still likely to lose money. And the idea in trading is not to lose money that you don't have to, right? So, I mean, if you can do those things and then just understand where your validation and invalidation levels are, intelligent levels, I mean, you're good to go as a trader. It really is that simple. I'm not saying it's easy, but it is that simple. All right? Let's not get simple and easy confused. All right, guys. I appreciate y'all being here. I have the Tiger. What's up, man? Good to see you checking in. I appreciate you, man. So yeah, that's where we're at, guys. Listen, we'd love to have you there at howtotradetowin.com. Follow me there on Twitter, TX West Capital. Don't forget, I'll be at the Web3 Expo there presenting on stage. I'm not sure exactly when yet. Sometime between the 9th and the 13th of October. So if you guys are out there, let me know. Maybe we'll schedule some kind of meetup or something with a few of y'all. man, oh man, other than that, y'all just be safe out there, trade safe, and man, just let the markets let you know what you need to do, right? All right, guys, y'all take care, and I will see y'all on Friday. Lewis Winthorpe III, I see you checking in there. Y'all have a great week. Take care.